All right, folks, back to work. Hope everyone had a fantastic day out there. Boy, what a move we saw today. S&P and SPY making a big move higher today. Nasdaq triple Qs making a big move higher today. I think it's safe to say right now that everyone is waiting to buy the dip right now. Everyone's trying to buy a pullback right now. But let's talk about pullbacks. So let's get real for a moment. If you have any trading experience at all, you know that pullbacks, they sound so easy, but we all know by now, right? That picking the perfect pullback, the best pullback entry is a lot more difficult than it sounds. So in tonight's video, I want to share with you a simple trick we use in our trade room using the 21 EMA that makes it really easy to not only pick the perfect pullback, but time the best entries on that pullback. It's a very simple trick. I want to share it with you guys tonight. By the time we're done tonight, you'll have an easy roadmap to pick better pullbacks, perfect pullbacks, and make some more money on Thursday morning. Now, I have three really important clues on the charts in front of us right now that are going to help us time and pick that perfect pullback for tomorrow. One of those clues is right here on the hourly chart. I like to use these hourly charts as a bigger picture, the overall directional bias. You can easily see right now we're very bullish overall. We're not going to trade though off these time charts. There's two more important clues on some faster time frames, some tick charts. Let's start first tonight on the S&P and SPY, and we'll drill down to some tick charts here first. Now, tick charts are based on volume. They make pattern recognition a heck of a lot easier. All the time frames, by the way, are upper left-hand corner. That is a 7,000 tick chart if you're watching for the first time tonight. And as always, that moving average is the 21 EMA. It's pretty much the only indicator we use every morning in our trade room. Now, I mentioned earlier there are three clues, two more clues here on these tick charts. One clue is this huge move. Now, why is a big move an important clue? Well, we want to buy low, right? We don't want to buy high. So whenever I see a big move like this, I need to get a relatively big pullback, allow buyers to buy low, and the goal is to go back up and take out that overhead high. That's one big clue. Another big clue here, if you recall in last night's video, we had that trading range, right? Whenever we see a range breakout, it's not an if, it's a when. It's almost a guarantee we're going to get a breakout pullback off what was resistance become support. So I think this kind of makes it pretty clear, right? The goal is to get that nice deep pullback and go back up to retest the high. I mentioned earlier, there's a kind of a simple trick we like to use with the 21 EMA. For example, the best pullbacks are going to be the sharp pullbacks. The sharper the pullback, the better. Because what happens is it leaves all the moving averages, the 21 EMA, the 50, right, the 50 EMA, right, the 200 moving average. It leaves all the moving average up top there and allows for this, what I call the snapping back in our trade room. The ones you can be worried about, the pullbacks you need to worry about are the ones that slowly grind on that pullback. So what it does is it drags down the 21 EMA. It drags down all the moving averages. It doesn't give us that chance to snap back or revert to the mean of those moving averages. So I want to talk about the grinding pullback here. But let's start first with my favorite, right? And that is, of course, the sharp pullback. What I really want right now is I would love to go back to that breakout pullback zone. But that might be a bit unrealistic for tomorrow. The markets are loving on the stuff coming out of the White House right now as Trump takes back over the White House right now. So we may not get that big move down. Obviously, I would love it, but it may not be the case. What I want is a sharp pullback. Now, here's the thing. Sharp pullbacks do two things. One, they create that separation going back to the moving average, okay? But more importantly, they fool people into thinking this is a reversal. Remember back that 60-minute chart. We are very bullish overall. So if I can get this thing running lower and separating off that moving average like that, what I'll do is use a very simple pattern using a 2-try rule. 1 try for the bears, 2 try for the bears. Once I have those bears chasing after it, now I can use their stops to squeeze, running back up to retest that high. Now remember, if you want to make more money, add to your winners. We know the market wants to go back and retest the high. This one type of entry pattern we look for to add to our winners and it's a technical, in this case, bear trap. Now, when I say bear traps, you want to get some separation off the moving average, a higher high in price, and you want to get just below that prior swing. So one of my favorite scenarios to pick that perfect pullback for tomorrow is that sharp move down. Remember, the scarier it is, usually the better the results are going to be. Trap the bears in. I call these failure patterns in our trade room, and then add more on the way back to that high with a technical bear trap. Now, the goal is to trap those bears in down here. Let's face it, sometimes we don't get that two-try failure. A lot of times, there are so many buyers down here, it'll shoot lower and then rip right back higher, and I'm not gonna get the entry that I want. If that happens, now we have to shift our focus now to trading bear traps. And that means I wanna be getting in as low as I possibly can. So again, that same trap pattern, higher high in price, and I want to get in right below that low. So again, if it really rolls down hard, if I can get a good 1, 2, I'm going to squeeze those stops and punch back up again. But if it bounces, right, really hard off any of this area down here, I then shift my focus not into buying up there, but buying on, just like I teach in the free video course, buying on that bear trap entry right below that low. Now, you can always string together multiple bear traps. For example, we oftentimes will get that bear trap there, we'll get the bear trap, and then as it rolls higher, we'll keep on adding on with more of these bear traps. See that? They're the exact same entry pattern. I will tell you right now that once you learn these entry patterns, picking the kind of perfect, again, I would love to get in way down here, but I can't pick the bottom on that, right? So keep looking for those strong bounces, buy the bear trap, and again, the goal is to go back up and retest the high. Now, one more variation of this kind of perfect pullback. If we're lucky tomorrow, we'll get a nice rundown, nice sharp rundown. We'll get 1, 2, I'll get that nice kind of bear trap, two-try failure. It'll pop up. But oftentimes what happens is we're going to get that 1-to-1 first target, move that stop up to our point of entry, just like I teach in our free video classes. But then what happens is we hold kind of the underbelly of these moves and the market runs back down and retest the low. Now, these retest trades, if you watch these videos a lot, you know these can be the biggest winners of the week, because when I go back and take out that low now, think about this. We're now in a nice low position after a really big move. It's a very desirable area now to be a buyer down there. On top of that, anybody who sells on that kind of breakout pullback up there, they take their profit. They become buyers at that low. So this area on that retest of that low is the worst place you want to sell. Don't forget the big hourly chart we saw on the first slide of this video. So this gives me a great chance now to do the same thing again. It's another bite at the apple. Bears try once, bears try twice. Again, I like 2 tries because I want to squeeze those stops. If you're caught short and you get stopped out, you buy your way out. We know where the market wants to go. So as the market now starts to run higher, watch that separation, right? That shallow pullback, that's the separation I'm talking about. And I'll tell you, once you learn how to add to your winners, the sky is the limit with your trading. Again, in our trade room, we call these the retest trade, right? It goes down, pops up, retest, and then bam, right back up to retest the high. So keep that on your mind, on your radar, to pick another perfect pullback for tomorrow as well. Now, I want to talk about if we grind going lower, because these are the ones that take a little bit more practice. We'll talk about that in a second. But before we do that though, let's take a moment real quickly here. If you're watching for the first time right now, this might be a brand new language for you. I know most folks watching right now, you know these patterns already. You're making money with these already. But if you're here for the first time, this might be a brand new strategy. It might be way over your head right now. What am I talking about? Traps, failures, retest trades. Okay, don't you worry. I teach the entire system. In fact, I have hundreds of examples, tons of examples, traps, failures, retest trades. I cover all of this in much more detail in our free video classes. What I'll do is I'll put a link up top there for you, upper right-hand corner. Grab that link that popped up there. and take that free trading course, because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room that tells us literally exactly where the winning trades are going to be each day. More importantly though, I want to help you time better entries, make a lot more money. I'll teach you 4 my favorite entry setups. You'll learn all about perfect pullbacks in that free video course. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, or even worse, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves all the trade examples I include in that short video series. The best part is it's 110% free for you. And also be aware too, guys, I'm going to put all the important links you'll need to learn more of this stuff. I'll put everything in the description of the YouTube video. Start first with the free video course. Most folks, believe it or not, they start making money on their own, all from that free video course I mentioned earlier. So start there first. And then don't forget, the place to be each day is in our trade room, 8 o'clock Eastern time. I'll put trade room membership links down there. Come trade with us every morning at the opening bell. And if you're on Twitter or X, as they call it these days, I post a ton of charts and videos and updates, mindset stuff on Twitter X. Give me a follow. All the details you need to learn more and hopefully earn a lot more are linked up in the description of that YouTube video. So where did we leave off? Oh yes, let's talk about if we grind going lower. If we grind going lower, one thing you want to remember is it drags down, right? Those moving averages. It doesn't give us that kind of snap back I mentioned earlier on in this video. If we grind down, there's a much better chance that we either A, go sideways in a range down here, or B, we pop up, retest trade, and then back up going higher again. So it's a big deal, those grinding moves going lower. So if we end up grinding down, because the odds are much better for a pop, retest, and then back up, or a range down here, I'm going to now be a little bit more cautious to pick that perfect pullback. And to do that, I'm looking for a bear trap. Now, previously, I talked about how a sharp move down, I can trap the bears in and use what's called a 2-try failure pattern back up again, right? Okay, that is a more aggressive way to enter this. In this situation, I'm going to be looking for nothing but technical bear traps. What that means is that as the bears begin to sell short as it pulls back here, my goal will be getting in as low as I can underneath those prior swings. So again, if we grind down, you're more than welcome, by the way, you're more than welcome to be more aggressive on this and go for a 1-2, right, failure pattern back up again. But my game plan will be, if we slowly grind down, I'll let bears try once, I'll let bears try twice. I'm not gonna buy as it goes higher. I'm gonna grab that bear trap entry, that higher, again, higher high in price, right below that low, strong green candle closing above that 21 EMA, 1-to-1 first target. And again, don't forget, you can string these together, right? Bear trap into bear trap, going back up to retest that high, right? Makes sense? So if it grinds down, a little more cautious to pick that perfect pullback. Now, one more thing I want to talk about, and then the Nasdaq, I want to talk about ranges. Because if we're lucky tomorrow, we'll get a nice big juicy trading range. The Nasdaq's a great one to teach that for tomorrow. I want to cover that in a second. But what if we don't, right? What if we don't get that sharp pullback and back up again? What if this thing keeps on ripping and running higher? It wouldn't surprise me right now because, of course, we've got all this new stuff coming out right out of the White House as Trump takes office once again. How would I buy this if we keep going higher right now? Well, what's the problem? The problem is I'm buying relatively high. So if all we get is a shallow pullback and then back up again, the goal will be to buy as low as I can. And we always do that with one entry pattern. It's always going to be a bear trap pattern. Now, obviously, I have no crystal ball, right? I don't know where this pattern will be, but you know my game plan. I want to go lower, trap the bears in, squeeze back up again. If we don't get that move lower, I need to buy as low as I possibly can. In our trade room, I always say buy shallow, pullback traps, shallow pullback. I want to get in as low as I possibly can. Traps look just like that, right? Up, separation, higher high, right below that low. Again, the key is that separation right above that 21 EMA. That's the game plan. If we don't get that nice deep pullback, I'm looking for bear traps, technical trap patterns. We teach those inside the free video course. Okay, now here's the $1,000 question. What if we go sideways overnight? Or even better, what if we tumble lower and go sideways? I'll tell you right now, if the trading gods are watching down on us, they're going to give us a bear move down overnight into a trading range. That sounds more difficult, but it unlocks what I call a slingshot reversal. Let's grab Nasdaq here right now. I know Nasdaq's getting lonely over here. Here you go, Nasdaq. Here we go. Now, Nasdaq, remember, think about the 60-minute time frame. We're not going to use this for entries. It's the overall directional bias, right? So we're overall bullish right now. Now, before I dive into the tick charts and talk entries on the Nasdaq, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and share this video link with other trading buddies. Guys, YouTube rewards me every time you like, share, and subscribe. I know we're all busy people these days, and I appreciate you guys spending a few minutes with me here every evening on these videos. So thank you so much for all the support, the like, share, subscribes. Now let's dive in and get our hands dirty here on some tick charts. Drilling down to some tick charts right now, there are really three big clues here on the Nasdaq. One is that big move. Big moves, we don't want to buy high. I want to buy nice and low. Get that nice deep pullback. Second big clue here is that previous trading range, right? That previous range. Anytime we see a range breakout, we expect a breakout pullback. And the third clue is a new trading range. Now, if you watched last night's video, we talked about this very same scenario. Anytime I have two ranges, range down here, range up here, there's a big gap in between those two ranges, and price is going to try to fill in all of this area. If you understand what's called the auction market theory, the way the markets distribute prices, right? A lot of volume piled up down here, a lot of volume piling up here, not a lot of volume in between. The way the markets work is they will build in between those areas, right? So it really makes it very, at least I think obvious here, that a big move down is a great spot to be a buyer. Now, on the S&P chart, we talked about a sharp pullback, how that, even though that's a bit scarier, it's much more desirable because, again, it leaves all the moving averages up top here, and it gives us that kind of snapback, that reversion to the mean that markets like to do with moving averages. We mentioned earlier too, right, that if it grinds down, we got to be a little bit more cautious on that because it drags down all those moving averages. Now, let's talk about the ranges here. There's two things I want to think about here when it comes to ranges. First things first is this range right here. Ranges are magnets, right? They act like magnets and they love to rotate back and forth. Okay, very, very important. Notice I've marked up the amount above, the amount below. Pretty simple idea, right? We buy low, we sell high, we buy low. Now, if you recall, we're a very bullish market right now on the hourly chart. So I'm not interested in selling high off here. If we have a range in an overall bull market, it's more likely now that we wind out breaking out of that trading range and then what? And then breaking out and pulling back. Okay, so there's a lot of ways to make money in a bullish range. We buy below the range and we buy breakout pullbacks. Now, I mentioned earlier that what really would make me happy tomorrow is if we went lower overnight into a trading range. This unlocks what I call a slingshot reversal. We'll talk about that in just a moment. If you like making money, you better stay tuned because this is a pattern everyone really should learn right out the gate as a new trader. It can be a very lucrative pattern. We'll talk about that here in a moment here. Now, as we go lower here, the same thing applies, right? The same thing applies. A sharp move down, right? A sharp move down is more desirable. Trap those bears in once, twice, use those stops, squeeze back up, add more on the bear traps. Okay, right? I'm repeating myself a little bit, but remember now, A range rotates. So now the amount below the range, project that above the range. This is why I wish every day was a range bound day like this, because now we're not just taking our profit targets off at the high of day. Now we take some off at the high of day, but more importantly, we leave a runner, right, for that pendulum swing on the opposite side. It's same pattern, right? Same pattern. It is a failure into trap combination. Also, too, don't forget that V bottom, right? If it kind of boing off that low, if it snaps off that low, it's all about bear traps on the way back up. Same idea, right? So same basic game plan we mentioned earlier on the S&P. And again, if it grinds down like this, even though that range is a big magnet, if it grinds down like this, it'll, for me at least, it'll be bear traps, right? It'll be 1, 2, higher high in price, getting in underneath that low. And again, if you're here for the first time right now, I know this could be a lot to learn here in this short video. But again, take that free video course. It's linked up in the description for you. It is well worth the watch. A lot of examples of bear traps, failures, range rotations there. You'll love it. Everyone loves that free video course. Now, if we end up going lower and getting that rotation higher now we wind up using that range as a breakout pullback. Now, when I say breakout pullback, most important thing, two things I want to think about. Breakout pullback, first of all, if we break lower first, right, and then run back up here, I know we have a valid breakout once we get through that pendulum swing. Okay, that pendulum swing is a really big part of this. So if I run up and we struggle right there, right, that probably isn't enough to be a breakout pullback, right? But if we just crush right through that pendulum swing, right, the amount below the range, the amount above the range, makes sense, right? If we break right through that pendulum swing, okay, now that is screaming at us. That is a qualified, verified breakout. Now, how do we buy the pullback? It's a two-legged pullback. Whenever I think about a breakout pullback, I always think about one leg, two leg. Think about a measured move, right? A measured move, A, B, C, D. Ideally, that A, B, C, D will line up somewhere right around that high of that trading range, all right? I don't care exactly where it is. I just want to see those two legs, right? Two legs. Now, that will give me the general idea of where I want to buy that pullback. Now, again, I don't have a crystal ball. I'm not going to blindly buy that breakout pullback. I'm going to use that same technique before I mentioned earlier, where as it pulls back to that moving average, look over here, right? As it pulls back to the moving average, wait for one, wait for two, because again, they may hold this and they may roll all the way back down again. I don't know. Well, I don't know what's going to happen. What I do know is that this, if we have a verifiable breakout, if we have a convincing breakout, this area right there is the last place you want to be selling. So I know for a fact now, I've seen so many of these in my career, that once those bears get trapped in, we can use their stops to squeeze those stops. We can run back up, going higher, and add more, right? Add more here on the bear trap pattern. Now, one really cool thing about breakout pullbacks is the size of the breakout leg is a measuring leg. Okay, the breakout leg is always a measuring leg. Once we know how big that breakout leg is, then I know how deep the pullback is. I can now combine those together. Remember, guys, want to make more money? Hold your trades long, or get better at holding on to your winners. Breakout leg is a measuring leg. We may not know how deep that pullback is yet, but once we do, then we can calculate where that breakout measured move is going to be, and that is where we put our final targets. All right, that covers buying below the range, and again, a verifiable breakout through that pendulum swing, breakout and pullback. Now, I've made you wait far too long. I mentioned earlier, if we're really lucky for tomorrow, we'll grind down and go into a trading range. Now, why on earth, why would this be a good scenario? This does not seem like a very good scenario. Well, here's why. Because this is a situation you want to learn. In this case, we have an overall bull market. A big move. Remember, big moves, they want to go back to retest the high. They are begging to go back to retest the high. It will go back to retest the high eventually. It's only a matter of time. So that is the context of the situation. Now, if I see a bear range, this will feel very bearish at that time. So what happens is when the market makes a breakout going lower here, you tell me, is this a good place to sell short? Of course not, right? It's the worst place you can sell short because now you're selling right into that breakout pullback zone. You're selling into oversold market in a bullish environment. You know how this goes now. And this is why I call this a slingshot reversal. Trap those bears in. Bears once, bears twice. That same failure pattern, that same bear trap add-on pattern. Now remember, where's the market want to go? It wants to rotate, right? But now think about how strong this momentum gets, right? Rotate off the low, up around the high. That pendulum swing right there doesn't stand a chance, right? That pendulum swing is a paper napkin right there. This will almost never hold that area. It'll blast right through and run right back up to retest the high. Do you see why I love these scenarios? As it slingshots, right? All those bears are trapped. All those sellers, they took the bait. They got convinced that we're bearish. We're not. It's a big move. A big move needs to pull back deep to attract in more buyers. Professionals are waiting down here to literally eat the lunch of these rookie sellers chasing after it. So bull market overall into a bear range. It fake out breakouts, bear traps, and slingshots going back higher. Boy, I'm getting goosebumps just talking about this. Brings back a lot of great memories from our morning trade room. Guys, that's our plan for tomorrow morning. Now, speaking of tomorrow morning, the place to be is in my trade room. Every morning, 8 o'clock Eastern time. As always, I'm going to put all the important links you'll need to learn more. I'll put it all in the description of the video. The easiest way to start making money in these markets is to learn and trade along every morning in our trade room. Start first with the free video course. Enjoy all the trade examples. Then come join us 8 o'clock Eastern time, and we'll do it together every morning at the opening bell. In the meantime, be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye for now.